Hey, what's going on YouTube? My name is Rich with Behavioral Wealth Consulting, where my goal is to help you change your behavioral decisions by improving your financial literacy. And in today's quick video, I'm going to be talking about things that may help you understand a little bit more about factors that make up your credit score and things you can start doing today to improve your score. Before we get started, just want to say that I am not a financial advisor. This video is for informational use only and is intended for education and not financial advice. As always, consult with your financial advisor before making any financial decisions based on your own situation. So, what is credit? Credit, by definition, is the ability of a customer to obtain goods or services before payment based on the trust that payment will be made in the future. Credit is a measure of your ability to handle your finances. So if you're watching this video, you probably noticed that my thumbnail reflects the most recent FICO score of 854, which is definitely my highest credit score that I've seen reported on myself, especially in the last few years since I've been purposely trying to improve my score. Now, I will say, however, that credit scores can vary slightly depending on if you're checking your credit report or through a credit card app, or maybe even the score reported by your bank. This is because every lender may have a slightly different way that they calculate credit scores based on criteria that they set for the services that they offer. So basically, they know what to offer you regarding interest rates. Now, when you talk about credit scores, you're probably referring to what's known as a FICO score. A FICO score is a credit score created by the Fair Isaac Corporation. FICO scores are used in more than 90% of the credit decisions made in the US. And many lenders maintain a hard and fast FICO score minimums for approvals. And typically, you'll see this in mortgage lending and auto industry lending specifically. Now, what's important to know about the FICO score is what factors make up your score, right? So, in order to improve your score, you have to know the things that make up the FICO score, so you know specifically what to improve or focus on. So, first, you have payment history. So, payment history makes up about 35% of the overall analysis of your score. This refers to whether an individual pays their credit amount on time or by your due date. Second is your accounts owed, or also what's known as credit utilization. This makes up about 30% of your credit score. This refers to the amount of money an individual owes overall. So if you have multiple credit cards, your utilization is going to be based on your overall limits and what you currently have as far as balance. Most experts recommend that using less than 30% of your overall limit is ideal. Third, you have credit history. This makes up about 15%. As a general rule, the longer you have credit, the better your score. That's because lenders are able to see a pretty significant history and be able to make a better calculation as far as your ability to pay back. Number four is credit mix. So this refers to the variety of accounts that you may have. So if you have credit cards, installment loans, such as an auto loan or mortgage, creditors or lenders tend to look at your mix and your ability to pay back on each one of those. And then the fifth item is new credit. So this makes up about 10% and refers to recently opened accounts. So the more accounts that you open in a short period of time typically can indicate a higher risk. Again, if you look at it from a lender's standpoint, if they see someone that is trying to open up multiple credit cards in a short amount of time, it could be looked at as a risk because of a potential indication that you may be short on cash and need credit in order to maintain. So the more new accounts open in a short period of time could be looked at as a potential risk. So just keep that in mind. So now how do you improve your credit score? So now that we understand what makes up the credit scores, now here are some tips to improve your credit score. The first, seems simple, but this is paying your bills on time. It's one of the most common reasons for negative impacts to credit. Lenders use payment history as one of the biggest factors because it's considered a good predictor of future performance. So, in order to ensure that you can pay your bills on time, you may want to take advantage of your bank's tools such as automatic payments to help you ensure that you don't miss payments in the future. Second thing you can do is pay off debt and keep balances low on credit cards. So, we talked about credit card utilization. This is another important factor in credit score calculation that can be calculated by getting all of your credit card balances at any given time and dividing them by the amount of your total credit limit. Again, as a reminder, most lenders like to see credit utilization of 30% or less. Number three is applying for and opening new credit card accounts only as needed. Don't open accounts just to have a better credit mix. It probably won't improve your credit score overall by just having more credit cards. It actually may harm your credit score by creating too many hard inquiries on your credit report. And hard inquiries remain on your credit report for up to 2 years. So keep that in mind. Number four is don't close unused credit cards. Keeping accounts open as long as they're not costing you any money, as far as with annual fees, is a smart strategy because closing an account may increase your credit card utilization ratio. I know for myself, when I first started using credit cards and I got excited about paying a credit card off, I would say, let me close that account so I don't use it, right? Not knowing that closing the account decreases my overall available limit, and which would increase my utilization on any other balances. So if you are successful in paying off a credit card and that was one of your goals, if as far as not spending more on it, cut the card up, right? So out of sight, out of mind, but it will help keep your score stable and also help improve your utilization. And number five is dispute any inaccuracies on your credit report. You should check your credit report on all three reporting bureaus for inaccuracies. So TransUnion, Experian, get your credit report pulled. You can visit any credit bureau website or annualcreditreport.com, which is authorized by the federal law, which allows you for a free copy of your credit report every 12 months from each of the credit reporting companies. This is important because inaccuracies in your report could be causing your scores to be low, and you may not even realize that. So those are some quick tips to help you improve your credit score. That's it for today's video. If you enjoyed today's video, please give me a like and subscribe to my channel for more videos to help you improve your financial literacy. Thank you for watching.